Hello friends, welcome to this budget session on indirect tax. So first of all, humble thanks to CMR and Sugant sir and the other panelists and my co-host, so Nischal sir. So that was an amazing session and the other speakers too. So this particular indirect tax related budget was less spoken because the media will be very much interested to know about the direct tax only. So indirect tax they will not be interested to know. And with due respect, Nirmala ma'am also did not speak much about, but there are many hidden things. So which really I take privilege to explain to you what are those aspects. First of all, she said that there was an increase in the GST revenue collection and that went to 1.49 lakh crore for 1 month, that is in Jan 2022. What is the takeaway from this is that there should be some kind of exemptions which she should have announced, because beyond expectation, when you get a revenue, then you should pass on the benefit to the people, and so therefore we can definitely expect some exemptions going forward, because already if you see the other sectors where they are promoting, so the education sector or the infrastructure sector or railways, whatever they are promoting, maybe as a part of that they could grant some exemptions, okay, but that is a commendable collections wherein till date so far they never got this much of indirect tax revenue, that's true, and but some exemptions would have been spilled over, that would have been great. And second, SEZ Act. So it was a long time due act that they should have made some changes, but rather than making the changes to that act, so they have deleted the SEZ Act. So that's something good, because SEZ Act, the Special Economic Zones Act, had certain limitations with respect to free exports, etc. But now that they are going to replace that SEZ law with a new act, which we need to see how it is going to be for export promotion. Because you might be knowing that Special Economic Zone is a notified area where lot of industries will be given infrastructure support, so wherein their overhead cost will be reduced and they can focus on exports. Not only that, lot of export incentives were given. Now they are going to retain those incentives and add with extra benefits, and they are going to make out a new law. So it's a welcome measure, definitely that is required, because the problem is that we are standing in a back position when it comes to competitive pricing in the export market. So that competitive pricing, if we need to achieve, so lot of government support is required. You take China for example, so amazing support they are giving to the industries over there. So the prices are being slashed down, of course. So there is a dumping also, but we don't want to do dumping, but at the same time, so we need to create a very good product in the export market. So we definitely need government support. So we need to look out for the new law that comes in the place of SEZ Act. Maybe there could be some good potential also for us to start, like lot of startups to come, and they can start manufacturing like small products, etc., and which can find a place in the export market. That is one. And then this budget, according to me, when it comes to indirect taxes, was promoting this Atmanirbhar Bharat, Make in India initiative, because if you see lot of finished goods previously which were exempted, now they are going to phase out those exemptions. For example, if I import a machinery, so previously it was exempted, but now that machinery they are taxing, they are going to tax, they are going to charge customs duty on that. What could be the reason? Because they wanted that machinery to be domestically manufactured rather than import. Previously, they were never focusing on that for capital goods, but now that lot of capital goods which were previously exempted, so clearly Finance Minister has made it clear that the exemptions are going to be phased out. So which means that the customs duties on finished goods and the capital goods is going to increase. On the other hand, so when some parts of those finished goods, if it is being imported, so they are going to reduce or bring that into the exemptions. So that's a clear-cut indication of Make in India initiative. So that is also a welcome measure, because around 350 exemptions which were previously there with respect to import of goods will be phased out gradually over a period of 1 to 2 years. And then changes in customs rates on import and export, if you see. So import of umbrellas, they have increased the customs duty. That is something which really I don't know. So why on umbrellas they have increased the customs duty? Maybe Nirmala ma'am might have felt that umbrella she can afford, and she wanted to pay more for that. So let it be, but that is not a great boost for the economy. And because the consumption of umbrellas are not that much in India to have an increase on the customs duty on that. Whereas import of wearable devices, hearable devices and electronic smartphone devices are going to increase, like customs duty is going to increase. The prices of this Apple Watch or Galaxy smartwatches, etc., and this headsets, AirPods, etc., watch out, definitely it is going to increase. On the other hand, if you see, it's raw material, so they are reducing. They are reducing the customs duty on the raw material of the smart devices, which means even mobile parts, then camera lenses, etc., they are reducing the customs duty. So that's a clear-cut indication of encouraging the domestic manufacturers. So indirectly, so the mood is like, don't go for Apple Watch, rather go for Fast Track smartwatch. So Fast Track reflects, walks, some new brand has launched. So go for those kind of watches which is made in India rather than importing the smartwatches. That could be the clear-cut indication. And if really the customs duty on these smart devices are increasing and the local products are getting sold, I mean the quality remains the same, that's a clear-cut good sign for the economy, because lot of startups will come into this field also. So that's a great thing. And then decrease in customs duty on polished diamonds and gemstones. I don't know why. So, but they have reduced the customs duty on this. So maybe encouraging the people to buy a lot of diamonds or what, I don't know. So not required there. But import of mobile chargers, mobile camera lens and other parts, yes, that was required, because see, Indian manufacturers of these smartphones are required. That's where they are attracting a lot of foreign players to come into India and start manufacturing it here, rather than sending it from abroad. So therefore this is very much expected and it is required also. Then export of shrimps, they have reduced the customs duty. This is just an illustrative list. So there are a lot of other goods, but some noteworthy cases I just wanted to bring it to your notice. So I just discussed this. Then faceless assessment under customs. Already they started as a pilot project, and now they are giving more wings to it. What is this faceless assessment? Previously, when an officer sends a notice, we need to make a personal hearing, try to explain him whether this product is chargeable to customs duty or not chargeable to customs duty, etc. And now they want to avoid this. They don't want a face-to-face interaction. Okay, so now already classes are online. So why can't assessment also be online? Maybe. So completely they are going into the faceless assessment. So for that reason, they started it as a pilot project, but that went well. So now they appointed more officers into this faceless assessment, which means that a person who is importing goods in Mumbai, Maharashtra, that particular importer officer, the jurisdictional officer, need not be Mumbai. So the officer could be in Chennai also. So which means that the boundaries are broken and the officers can serve more and more importers rather than calling it as serving, recover more and more customs duties from various importers across the country. So this will definitely increase the customs duty revenue, and that is about faceless assessment. Then the most awaited input tax credit under GST. So I don't know whether you are aware of the concept of input tax credit under GST. So a small info I am sharing about that, then I will come back to this amendment. So input tax credit is simple here. So I am making some purchase, I am a trader, I am making some purchase. On my purchase, whatever tax that I paid, whatever GST that I have paid, that can be taken as credit and adjusted against the tax payable on sale. For example, I purchased a product at 100 rupees and I am selling that product at 150 rupees. On 100 rupees, I would have paid 12 rupees as GST. 12% is the rate of GST, for example. So on 100, I would have paid 12 rupees as GST. That 12 rupees I will take as credit. This is like a virtual account. Now, upon sale, 150 rupees, I need to pay 18 rupees as GST. So for this 18, this 12 will be set off. So remaining 6 rupees I will be paying as net liability. So the advantage here is that only on the value addition I will be literally paying, which is nothing but 50 into 12% if you see 6 rupees. So that is what the concept of input tax credit is all about. Previously, the time limit for taking this credit has been limited to 20th October. And now they extended it to 30th November. For example, you made purchases in a financial year, and those purchases you don't know whether you can take credit or not, so you missed. Now, previously the time limit was 20th October, but usually whenever you miss taking the credit, like corporates if you take, so these corporates and all, they will not know whether a particular expenditure is eligible for input tax credit or not. And during the time of audit, so the internal audit or the stat audit, so they will be trying to explain as to, yes, this is eligible for ITC. But previously what has happened is that the time limit for taking those credits was over, because the audits will start after that time, September, October, November, this time only. But by the time the time limit would have been over. So that's why they have extended it till 30th November. That's something which is really good. And next is time limit for credit note. Credit note is a document that will be given whenever there is a sales returns. So when I sell the product, I will pay GST, because GST is payable in India on an accrual basis, not on receipt basis, which means that when I raise invoice, I have to pay the tax, not when I receive money from my recipient. So even on credit sales, I need to pay GST if I am a trader. So I am making supplies. So supply of goods or supply of services. So I need to pay tax whenever the supply is made and the invoice is raised. Now you are rejecting the product, you are returning the product. When you return the product, already I paid the tax on this product, treating it as sale. Now you are returning the product, means unnecessarily I paid tax. So what is the recourse that is available? I should be able to give you a credit note under GST. So when I give a credit note to you, so whatever tax that has already been paid, so that will be reduced from my liability in future. Whatever is my future liability, in that the tax already paid will come down. So this benefit was given up to 30th September only if the sales returns happens for a financial year. For example, financial year you take 2021-22. So I should got the returns. I should have got the returns. So whatever sales that I have made from 1st April 2021 to 31st March 2022. So I should have got those returns by 30th September. Then only I can give credit note. But they have extended it for 30th November. So 2 more months they have extended, which means, so still I can expect the returns at a extended time, because nowadays they are giving, try and buy. So they will give the product, they will be asking the recipient to use it, and they can give the return, because 30 days, 60-day return policy is also there. Some places 90-day return policy is also there when it comes to commercial goods. So due to that reason, they little extended the time limit up to 30th November. That is also a welcome measure. Then this is not at all fair, wherein if my supplier has not paid tax to government, whatever input tax credit that I have taken stands reversed. This is never expected. This was never spoken. This never came in the news also. So because the media basically are financial illiterates when it comes to indirect taxes, so whatever they could understand, that only they will give. This is a very big problem that happens, that is going to happen. The entire GST taxpayers, let it be manufacturers or service providers or traders, they are going to largely get affected because of this amendment. For example, I am doing a business, I am a trader, I made some purchases and I paid the tax to my supplier and I took the credit and adjusted with my liability, I am happy. Now, all of a sudden, I came to know that my supplier has not paid the taxes to the government. Is it my mistake? So what is my mistake in this? But whatever credit that I have taken needs to be reversed. So therefore, lot of surprise elements will be there in this, wherein my supplier not paying tax, so the department will be giving a notice to me, asking me as to why you have taken the credit. So whatever credit you have taken, now it is not allowed, you need to reverse. This, I don't know how the trade is going to react on this, but this is unfair, really unfair, because it is not the mistake of any person. The one who purchases the product, it is not his mistake, right? When his supplier is not making the payment of GST. If this amendment is going to prevail, okay, then definitely the contract should have a lot of indemnity clauses. So whenever we make a purchase contract, there should be an indemnity clause stating that if we make a purchase and the contract should have a clause stating that GST only when the supplier makes payment to the government, we are going to release it to the supplier, or if the supplier is not making payment to government, then the recipient will be able to recover the same or file a case in the court. So this kind of legal elements needs to be incorporated in the purchase contract now. Then interest on wrong availment and utilization of ITC, that's another amendment. That is, by mistake I have taken the credit, but I did not use the credit previously and I reversed it. First I took the credit wrongly, I did not use it and I reversed it. For that also department used to ask me to pay interest previously, but now nothing like that. Only when it is availed and used, utilized. So then only it will be. To understand this, I just gave you one small example. So for example, GSTR 3B. GSTR 3B is a return which is to be filed for July 2021 and which is filed on 12/8. Actually by 20th August we need to file and it is filed on time. But the gross liability is 12 lakhs. So my liability on my sales is 12 lakhs. And input tax credit is 18 lakhs. So wrongly availed ITC, out of these 18 lakhs, 2.5 lakhs is wrongly availed. This is wrongly taken. Actually, I am not eligible to take the credit, but I took the credit, 2,50,000. Now, how much is the credit that I am utilizing? Only 12 lakhs, because my liability is only 12 lakhs. 18 lakhs is the credit I have taken. Out of that 18 lakhs, you take out 2.5 lakhs. Still, there is 15.5. So, but my liability is only 12. So, I have not used the wrongly availed credit. I have not used the wrongly availed credit. As I have not used the wrongly availed credit, I don't have to pay any interest when I reverse it at a later point of time. Suppose if I have taken 8 lakhs as the credit, wrong credit. So, total 18 lakhs. Out of that 18 lakhs, 8 lakhs I have taken as wrongly availed credit. My liability is 12 lakhs. Means I would have utilized 2 lakhs for payment of my liability. Actually 10 is only correct input tax credit, but I have taken 18 lakhs. So which means 12 lakh liability I would have adjusted, means 2 lakhs is wrongly utilized. So only on 2 lakhs we need to pay interest. So but that interest rate previously was 18, now they have increased it to 24%, but it's okay. rather than paying interest on entirely which is wrongly taken and reversed. So see, errors do happen. Sometimes I wrongly take the credit, I reverse it knowing that it's a mistake. So for that I should not be penalized. So they are telling that only if you use it I have to pay, otherwise not. So that's a welcome measure. But the interest rate has been increased to 24% there, still it is okay. So this is one example for that. Then cancellation of registration if returns are not filed. So every registered person under GST is required to file certain returns. So these returns like GST 3B that contains the details of how much sales I made, how much purchases I made, and input tax credit, what is my liability, etc. All these details I need to submit to the department, GST department. If I am not filing returns for a continuous period of 6 months, then my registration gets cancelled. So department will cancel my registration. Okay. Now this 6 months is removed and they are telling the officer will decide what is the continuous tax period, which means 3 months also if I am not filing return they can cancel. 4 months continuously if I am not filing returns also they can cancel. This is something not correct. For example, you take a situation where my business is not doing good, or this is a sole proprietor and the sole proprietor is infected with COVID, or in future some other virus will come. So Florona already it started, okay. So some new kind of virus will come and a sole proprietor, he could not do the business for 3-4 months because he is the only trader in his family. There is no one to look after that business. He could not do the business for 3-4 months because of which returns are not filed, and now he will get a notice from the department stating that your registration is cancelled. Please clear off the pending dues and stop doing the business. This is not fair. So maybe some regulations are required in this place. So this are the updates. Of course, only the major areas I have covered. There are a lot of technical details, 2 technical details. So those too much technical details I have not shared. So these are the major updates when it comes to indirect taxes, which I would like to share with you all. And over to you. If you have any queries, you can, if I have the time to answer your queries. And just one concluding point which I just wanted to. So already in income tax one point you would have come across about the cryptos. So I just wanted to add one more point to that, that there is GST also on sale of cryptocurrency 18%. So when you sell cryptocurrency you have to pay 18%, and sale minus purchase, the difference is the gain. On that gain you have to pay 30%. Which means not only 30% is new, but 18% was already there. So beware next time when you are buying cryptocurrencies. Thank you.